Labour has never done well in a UK election without doing really well in Scotland.
We need deposit ATMs and we need withdrawal ATMs, and we need a law that means that businesses have to accept cash.
UK workers have had the most bargaining power essentially since the 1970s because the jobs market is so tight.
Can Britain actually afford to maintain a global military presence?
You're listening to Bloomberg UK Politics. I'm Lizzy Burden.
And I'm Stephen Carroll. Welcome to the programme. Lizzy, there's a slight linguistic theme running through the programme today. We've got new metaphors for you, and we've got a new acronym as well that's dominating the political conversation today.
Say it really quickly.
RAC.
Okay, say the real thing really quickly.
Reinforced autoclaved aerated concrete.
Very good.
That was very a lot of assonance in there. It was like an awful lot of vowel sounds.
A true professional. Tell
Indeed.
me what it is.
This is the story around those 100 schools, more than 100 in fact, that have had to be closed due to an emergency because of this kind of concrete rack. It was used in buildings after World War II and is seen as now having a much higher chance of collapse in old age than traditional concrete does. This is, of course, a massive issue as we're looking at children going back to schools and around the country. Many of these buildings now not being able to be used. This is something the Schools Minister, Nick Gibb, has been talking about this morning, and why this decision has come right before this all-important back-to-school moment.
What we learned over the summer is that the policy that said that where the rack is identified as low risk, you don't need to take remedial measures. What we've learned in the summer is that is no longer a safe attitude, and we are now taking the cautious approach that even where it's not critical, the condition of the rack, we still want those buildings taken out of use.
So that was the Schools Minister, Nick Gibb. It's not quite the back-to-school reset that Rishi Sunak was hoping for.
No, I mean, look, it's not the sort of news that any parent wants to hear. Is there going to be any problems of accommodating children as they go back to school, especially if the summer has felt a bit long for anyone with their children off school. But also, it's not a good look for the government going back to work next week when, you know, Parliament resits. This is sure to be a very controversial issue there as well, and yet another problem to add to the list.
Well, let's stay with the idea of buildings, but in the more residential sense, because of course we've had house price data from Nationwide this morning. It showed the fastest fall since 2009. Prices were 5.3% lower in August compared to last year, and it really is another reminder of the pain that's being inflicted by higher interest rates. So for analysis, we're joined now by our economics reporter Lucy White and Niraj Shah from Bloomberg Economics. Welcome to you both. Lucy, what did we learn from these Nationwide numbers?
So it's another month of annual declines. We've seen the pace of annual declines now steepen to its greatest since 2009, July 2009. That's a 5.3% drop in house prices year on year. Month on month, it's 0.8%, much worse than economists were expecting. And it's brought the average property in the UK to a value of $259,000 just over. That's down, about £14,600 from a year ago. It's not essentially a good number for the government as they look to prepare for a general election next year. These are property owners, households with mortgages tend to be the Conservative Party's sort of key votership. So yeah, it's something that perhaps might not bode well for Rishi Sunak.
Quite grim reading, but it also comes in a week that we've had some other data points too on the housing market. We heard from Zoopla on the programme earlier this week. Just remind us of the other bits of data we've had out this week that have told us about where we are with the housing market now.
Yeah, so Zoopla have said that the housing market is on track to see the lowest level of transaction or home sales since 2012, which again is a pretty bleak figure. I mean, obviously we've had this huge surge in property buying during the pandemic when we had very low interest rates and a huge number of people trying to find larger properties outside of cities. Now we're really starting to see that die down as higher interest rates bite and people are having to, perhaps think about whether they can afford the type of home that they might want to be moving into.
Yeah, so of course it's the Prime Minister's top priority, as we well know, to halve inflation by the end of the year. To do that, the Bank of England's been raising interest rates, but also we know that there's this lag in monetary transmission because you have to wait for people on fixed-term mortgages.
Klaxon, what's monetary transmission, Lizzy Burden?
Well, you've got to wait for people to refinance their mortgage for them to experience the new higher interest rate. So I guess I'm wondering whether the pain is going to come actually closer to the election, and that's going to be bad news for the Prime Minister.
I think that is what we're going to see. As you say, we've got a higher proportion of people now who are on these fixed term mortgages. And, for anyone who refinanced their last mortgage, a few years ago and was on a 5-year or a 2-year term, they may only be really starting to experience the pain of that now. There's a limit to how much the government can actually do to address this, because, of course, this is exactly the sort of pain that the Bank of England is essentially trying to inflict, for want of a better word. They want to be able to reduce demand so that people are buying less, so that we can bring inflation down. I think the government may find their hands tied.
Yeah, on this as well. Lizzy, stay with us. I want to bring in Niraj Shah from Bloomberg Economics, who's been listening into this conversation as well. Niraj, how should we be characterising the data that we've had out this week? Obviously, we've heard warnings from yourself and colleagues for a long time about the slump that was coming in the housing market. So where are we in it?
So I'd probably characterise this as it could be worse. So it's actually bad, but we're not actually likely to see at this stage a repeat of the 90s recession or the financial crisis, where house prices fell by about 20%. And so from last year, house prices have fallen by 5.3% so far, and we're expecting around a 10% decline from the peak. So we're about halfway through. From here on in, we're actually expecting more of a slow puncture going forward. And you might ask, well, why aren't you expecting a larger decline? And the key thing is unemployment. Unemployment is still expected to, although we're expecting it to rise, it's still going to be historically low. So we're expecting it to peak around 5% next year. And that will help prevent forced sales. And also legislation so on restricts banks are not going to repossess your homes if you're struggling with mortgages. It's going to be a last resort. So a few things that are different from the past, basically.
So what it actually means for consumers, for voters, is, as you say, not that people lose their houses, but then what? Is it that they're in negative equity? Is it that people are struggling to get on the property ladder? Is it actually an opportunity for some people to take advantage of lower house prices and bag a property?
There are always opportunities in the situation, but I think the bigger picture is a lot more people will be struggling. We're expecting around 4 million households to see a sharp increase in mortgage repayments by the end of 2026, when all their fixed rates expire. But that really means a big chunk just before the election are going to be really being hit or being shocked into this. And the bigger picture here is if you're spending more on your mortgage payments, you can't spend on the economy, and we're actually expecting a mild recession next year as rates rise.
Niraj, when does this bottom out, as it were? When do we get to the worst bit of this housing slump?
I think the headline figures you're going to see, actually, in the near term, actually, but I think what I'm getting at is the slow puncture. We're not going to see a quick recovery. And that's the problem here, because the longer the pain lasts, it gets more ingrained, it knocks confidence, and it really is going to be very sluggish ahead.
So what can the government actually do, Niraj, to help with this situation? When we talk about the housing market, we usually talk about how the government should build more homes. But in this situation, policy-wise, what would be ideal?
I don't think there's an ideal solution for the short term. Certainly, building more homes, that's a long-term thing. That should have been, more investment and so on. There have been short-term tricks which have actually distorted prices, like stamp duty cuts and so on. But that always distorts the market and causes problems further ahead. For an election coming up, you might want to help first-time buyers, particularly with a new Help to Buy scheme. But again, there are problems with this, and affordability-wise as well. How much can the government pump into this, and how much will it distort the market in the long run?
The government's tied a little bit in this situation. Lizzy, I wanted to go back to you and try and give us some sort of sense of optimism. Is there anything that we could be looking out for coming up that might be some good economic news for the government?
Well, in a way, there is possibly something to look forward to, in that we've got wage data coming out in just over a week, I think. And we are starting to see real wages grow again, which is good. Obviously we're seeing inflation fall back and wages are still rising. So Britons are once again finally starting to get richer. Obviously, that's not quite such good news for the Bank of England as the Bank of England tries to tame inflation, because it means people have more to spend, which could essentially push up inflation. So what's good for households on the one hand might actually be a sort of double-edged sword.
Niraj, back to you. Can you put this in context for us? Lucy's talking about the wage data that's coming up. We're going to get another CPI reading as well, or inflation reading, I should say. My own jargon klaxon going off there. Let's talk to... Thanks, Liz. Looking ahead to the next Bank of England meeting, when we think about where interest rates will go from here, this is central to this story as well. What is the path ahead for the Bank of England?
Bloomberg Economics are expecting another rate hike. It's a done deal in September. So that will a 25 basis hike to 5.5, and we're actually expecting another hike in November. So we're actually expecting rates to peak at 5.75%. And again, I think they're going to more focus on core inflation and the wage growth, and you're just not going to see the data for before then and the messaging. So I'm afraid we're going to likely see 2 more hikes.
All right, thanks for the analysis to Niraj Shah from Bloomberg Economics and our economics reporter Lucy White. Now, Stephen, we were talking about the future path for rates from the Bank of England. The chief economist of the Bank of England, Hugh Pill, had some colourful remarks about this on his trip to South Africa recently. He compared the path for rates to Table Mountain, which is something that we've talked about on this podcast before, may I add.
We love a new metaphor.
Yes, Charlie Bean, the former Bank of England policymaker, did tell us that it would look like Table Mountain. This is what Hugh Pill was talking about, that you'd get a flat top. You'd get a steady increase and then rates would stay high.
Lizzy is miming this out, by the way.
I am. I don't know why. I don't know why I bother. But they stay high for a while and then they come down, rather than a Matterhorn model, or as Charlie Bean put it, an Everest model, where they go screeching up and then screeching down. But for the average consumer, for the average voter, surely the Table Mountain model is better because you can plan for it. You can ask for that pay rise and deal with it. But I did have to wonder, Stephen, whether Hugh Pill might take the cable car option down.
Let's take a listen to the man himself making this analogy for us.
There may be multiple paths that get you to where you want to be. Some of them have a more rise rapidly and then fall rapidly, what we sometimes call the Matterhorn profile of interest rates on the left-hand side. But an alternative one would be to hold restriction in policy for longer, but in a more steady and what Raphael described as resolute way, with a profile for interest rates that looks a little bit more like Table Mountain. And I think that is a big part of where the debate about monetary policy is today. And I think consistently with remarks Raphael made, I think I would tend to favor the latter. I think it probably imposes fewer risks to financial stability. I think it's more of a response to trying to squeeze inflation out of the wage, price, and cost-setting system. And crucially, I think in the UK, it's more effective at ensuring that we see transmission through the sort of 2 to 5 year maturity rates that have become very central to the way the mortgage market and private borrowing operates.
That was the Bank of England's chief economist speaking at a conference in South Africa, which also explains why he decided to make Table Mountain his metaphor for describing interest rates. But I'm certainly pleased to have a new linguistic crutch to fall back on for our endless conversations about where interest rates go next. Interesting to hear the latest comments that we've had from Hugh Pill talking about the UK yet to see a downturn in core inflation. That's when you strip out some of the more volatile elements of volatile elephants. The elephants are coming. The volatile elements of price inflation as well, which is sort of a very key metric that the Bank of England watches as well. Lots of conversations being had on foreign shores about the UK economy. We were listening to our colleagues on Bloomberg Television earlier. Francine Lacqua is at the Ambrosetti Forum in Italy, and she's been talking to some of the leading lights of economists as well about their take on where the UK economy is.
Yeah, on the shores of Lake Como. Windy, it looked lovely. But yeah, she was speaking to the Nobel Prize winning economist Joseph Stiglitz, and he actually said that the Bank of England's got it harder than anyone else because of Brexit. But interestingly, if you look at Rishi Sunak's 5 priorities, he said that growth is more important than inflation for the UK, because inflation, he says, is going to come down in the UK anyway, when it comes down in the Eurozone and the US. So we'll just get a transfer effect. Francine was also speaking to the renowned economist Nouriel Roubini. He says that the UK, of all the major economies, is the most likely case of stagflation. It could be the perfect storm, were the words he used. And a question that we've asked repeatedly on this podcast is whether the government, given it's its top priority to halve inflation, should be using fiscal policy to control it rather than leaving the whole task to the Bank of England. Well, actually, Roubini made an important point. He said, you're trying to grow the economy, so you don't want to retrench the economy by using fiscal policy. And then he said that he was actually quite hopeful on the Labour Party's stance on Brexit, which, as Stiglitz said, is contributing to inflation. But he said, Roubini, that Labour wouldn't reverse Brexit, but maybe it would do something on the customs union.
Yeah, and perhaps some hope of easier relations, particularly with the arrival of extra checks on the way as well. For our own Klaxon purposes, stagflation is when you have inflation with high unemployment and stagnant demand of the economy as well. So that's kind of the other elements. I don't know, am I overdoing this? Probably. But anyway, we'll move on.
My foghorn has broken. Do you like Jay-Z, Stephen?
I feel like this is a loaded question. I'm not a huge fan.
Do you know that song Otis, where Jay-Z's like, I've got 5 passports, I'm never going to jail? I've just rapped on the podcast. I knew it was Friday. It's a silly season. Yeah. Well, okay. Let me bring it back to the news. The number of people living in England and Wales with dual nationality has grown dramatically in recent years, and this is as British citizens, particularly young people, have been getting a second passport after Brexit. And our reporters Alex Mortimer and Maddie Parker have been looking into the story. They join us in the studio now. Maddie, what's going on here? How did you find out this story? What are the numbers saying?
So yeah, it's really interesting. We got new ONS data yesterday. It's from the census data from 2021. And there are a couple really interesting trends. As you say, the number of people with dual citizenship in the UK has grown dramatically. Particularly over the past decade, it has doubled. So in 2011, the number of people in England and Wales who had 2 passports was around 600,000. And that has grown by 2021 to 1.2 million. So it's a pretty big increase. The same thing for those number of people born outside of the UK, but with UK and EU citizenship has grown 5-fold. So that's now at about 150,000. So there's definitely this growing trend, a very upward trajectory of people seeking out second passports and all the benefits that they might bring.
Yeah, and Alex, do we know what's behind the trend? I mean, is it as simple as just saying Brexit?
Well, I mean, obviously, as Maddie was saying, this is 2021 census data that was released to us yesterday on Thursday. And obviously our main point of comparison is 2011, the last census. And it is obviously very hard to ignore that slap bang in the middle of that decade, we had a Brexit referendum and a protracted period either side of that of, let's not say panic, but definitely uncertainty, that's the one. And, obviously that's about working different countries, travelling to different countries, even, concerns about going on holiday to different countries. And, it's very hard to say that that's not played a major role here. People jumping on that opportunity to pick up a second passport where they are eligible to. There is another kind of factor at play here, which is we're still seeing large inflows into the UK. We're still, seeing net immigration, even from the EU. And actually one of the things that we kind of picked up on this data is that we're seeing lots of people move to the UK, have children, then it's their children who are kind of getting second passports at a high rate now at the moment. So I'd say those two are probably the major driving factors.
Okay, so it's not people trying to flee. I have to confess, I had 3 days off in August and I was forced by my husband to spend one of them in the Philippine embassy renewing my Philippine passport so that
sound advice.
If I have children one day, that they can escape if we're underwater. But I did think that we're probably less likely to be underwater than the Filipinos. That aside, Maddie, how does all this data break down by country? Is there a particular one that's top of the list when it comes to dual nationality?
Yes, so definitely. So among the EU countries, in the top 5 we have things like Irish, French, Polish, German nationality. I think Irish is one that's particularly interesting. There's been a surge in interest in getting an Irish passport, obviously because the Republic of Ireland is still in the EU, whereas the UK have voted to leave. So lots of people have try to...
And we're great, obviously.
And you're great, so that helps.
There should be a sound effect for that as well.
Yeah. So yeah, that's the thing. And the eligibility for an Irish passport is fairly straightforward in the sense that you need to have at least one grandparent who's born there, or either your parents are Irish citizens when you were born. And that would give you the benefits of freedom to live and work across the EU bloc, so that's very helpful. And then outside of the UK, we've got a lot of countries that are English speaking or affiliated with the Commonwealth. So we have like Australia, New Zealand, Canada, Nigeria. So yeah, all of those are countries that are kind of leading the way in this surge.
It's really interesting, actually, when you look at the statistics, the number of people who've gotten Irish passports since Brexit. So, I mean, the figures from that census, 160,000 people living in the UK hold both Irish and British passports. Now, there's a slight distortion in some of these figures as well, because if you're born in Northern Ireland, you're entitled to have both passports, and the latest figures, they're from the middle of last year, so they're a little bit out of date, show that around 35% of people living in Northern Ireland have an Irish passport. But in the meantime, because of this, partly down to Brexit as well, there's been an absolutely massive surge in the number of people applying for Irish passports every year, so much so that the Passport Service has had to actually up its staffing to be able to deal with it. If you think about it, Ireland's population only surpassed 5 million last year, and last year there were 1.1 million passport applications processed by the Passport Service. And Ireland is a bit of an outlier in this because there is a high proportion of Irish citizens who live outside of the country. The last estimates put it around 1.5 million from the Irish Department of Foreign Affairs. But the increase has been notable, excuse me, in the number of people living in Britain who've applied for Irish passports. Partly, of course, it's been such a long tradition of immigration, which means that the number of people who have a grandparent and are thus eligible is quite large in this country too.
In this context, is this a large portion of the population that have dual nationality?
Yeah, so the number is actually about 2.1%. And we spoke to a professor from King's College London who said, actually, that sounds quite small considering...
Is that my friend Jonathan Porter?
Yes,
it is.
He's always giving me economics lessons.
Oh, he's very helpful. So, it sounds... actually like a surprisingly small figure considering the long history of immigration to the UK, but it's actually that number doesn't really represent necessarily everyone who's immigrated from certain countries. So for example, if you've come to the UK from India is one of the countries, a handful of them, who don't allow dual citizenship. So if you come to the UK from India and you seek out a British passport, as soon as you get a British passport, you have to automatically surrender your Indian one. And for many, many years, the Indian population is the largest foreign-born population in the UK. And the same thing actually goes for China as well. So if you come to the UK from China, you also won't be able to claim dual citizenship. So although the number sounds quite small, it's not the bigger picture, but it's definitely on this upwards trajectory.
Alex, so one of the other interesting details in this as well is the age of people that are getting dual citizenship. What's in the figures that stood out for you?
Yeah, exactly. Well, as I was saying, there's a big uptake in kind of second generation immigrants, so people whose parents have moved here and they've been born in the UK and currently resident in England and Wales, and they've got strong ties to another country, obviously really jumping on the opportunity to pick up a second passport. So yeah, as you say, some of the figures are quite striking. The median age of someone born in the UK, living in England or Wales at the moment, but with both the UK and a Polish passport, for instance, is 7 years old.
Wow.
That's closely followed by France and Germany, where it's 15, and Italy, where it's 20. So it is very much young people leading that particular aspect of the trend. And I think there's some interesting implications of that for the future. So obviously, one of the big benefits of dual citizenship is you can very easily go and work in another country. You don't need a visa, you don't need work permit, or kind of that faff, for want of a better word.
Fair.
Yeah. So obviously there's a question of, are we going to see people kind of moving away from the UK back to home countries if the job market is more favourable, if there's more kind of enticing opportunities. And the second thing that I'd lastly highlight is obviously the younger demographic voted overwhelmingly to remain in the EU, and if it's young people who really feel that they're being pushed to go and get a second passport, what does that say about the potential for another Brexit referendum at some point in the future when in some cases these people become of voting age in the UK?
It's a really interesting point. I also wonder whether it's about tax, because of course we've got the highest tax burden in the post-war period in the UK, maybe more favourable elsewhere.
Well, perhaps, yeah. I mean, I think it could be a difficult battle if you go to some of the continental European countries, certainly, where personal taxation can be much higher. But certainly, of course, that depends on how much you're earning as well. Fascinating story. Thanks so much to Maddie Parker and to Alex Mortimer for bringing us the details of that story around dual citizenship in the UK. Lizzy, it's Friday, as we've signalled several times now, but we are looking ahead to a very busy political week. Next week, of course, Parliament resumes as well after the summer recess. Lots to talk to about the summer holidays that various politicians have been on too.
Yeah, Rishi Sunak in California, who'd have thought it, back to his spiritual home.
Yes, taking his daughter to Disneyland. Why not? Keir Starmer in Swansea in Wales. I'm sure equally as glamorous.
And the Prime Minister and his wife are going to be at Balmoral with the King, as was traditional with the Queen. So I can see the future episodes of The Crown writing themselves.
Indeed. Of course, we will be bringing you Prime Minister's questions on the programme next Wednesday as well. That'll be the first one of the new session as well. We'll also be watching out to see if we get any more details of the timing of the by-election for Nadine Dorries' seat after she formally resigned from Parliament last week. There is some questions over whether or not it could be called even around the period of Tory party conference. That's one to watch for next week as well. That is it from us for today, though. If you like the programme, don't forget to subscribe, give it 5 stars so other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by Jack Ryan and James Woolcock, and our audio engineer was Maruful Hussain. I'm Lizzy Burden.
And I'm Stephen Carroll. We'll be back with more on Monday. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.